welcome everyone to the Trading Talk Uncensored live Q&A. My name is Danny and I will give you the webinar today. I'm going to go through the structure of our webinar to understand a bit better what we're going to do in each part. So our agenda will be previous questions, dynamic questions, link information, and webinar privileges, and lastly analysis. We're simply going to take the questions that we have here, break it down, and do our best to answer it on the best side. And then the next part will be, of course, I'll put down questions that you guys will write to me in the question section, and hopefully I can show you the answer on the screen. And this part will be a bit more informative. We have some links here to save you the trouble to look for that by yourself on our website. And lastly, analysis. This is only if we're not going to cover the analysis part through the questions themselves, which obviously we would prefer that to happen. But in case not, we can use this nice slide to do exactly that. Beside that, any capital markets and trading information disclosed in this webinar is provided for informative purposes only and should not be constructed or applied as an investment advice, recommendation, or a suggestion. Furthermore, I would like to say that the webinar is recorded, so even if you guys need a recap or you just want to see it again for a particular part, you can find it on our YouTube channel later on. Okay, typically all the webinars are uploaded to our YouTube channel. You can find everything there. And we are having today some very nice questions. Okay. I should probably get ourselves, no, not that. Going to get ourselves, there we go, somewhere to put down the notes, and we are starting. Okay, so the first question is, how does the leverage works? Okay, very nice. How does the leverage works? Okay. So first of all, this whole interface, just so we can be on the same page, what I'm about to explain, it doesn't matter which platform you're using, MT4, MT5, this, any other platform would be fine. The leverage, my explanation is universal, so it can be applied for other platforms as well. The advantage using this platform is because it's already showed you here. You don't have to look for the leverage because it's here, right? You can also find it in here in the instrument details. If you scroll down, okay, the leverage is here, and it's also showing you the percentage of margin, which I'm going to explain what it means, but it's also presented you here. Okay, when using a leverage, okay, I should first, I'll put it down, and then we will see together. Okay, so to open the nice sidebar here to the right, I just click sell or buy. They both do the same. Obviously, buy will pick a buy and sell will pick a sell, but it opens the sidebar. Okay, and leverage, how exactly does that work? So for that calculation, I'm going to write down a couple of things. Price per unit times units equals value. We also have something called leverage. Leverage is 1 to 20 in this case. I'm going to write down a definition. Yeah, multiplies buying and selling. Okay. And we have value divided by, don't worry guys, I'm explaining everything in a minute, equals margin impact or margin requirement. Okay. Now, let's first understand what is price per unit. The price per unit is right here, guys, presented with a bid and ask. Okay, we have the price per unit presented in here as well. Okay, so that will be, again, for any other asset. We're going to look at, if we're going to look at, this way I can split the charts, okay, to have two charts. Let's put here just, let's say, oil, okay? And then we're going to click sell or buy. Okay, now my price per unit is 80. Okay, if this would have been silver, it would have been 30. Okay, it's presented here at the green ray. Sometimes it's red, but here at the ray, or here. Let's go back to our gold. Okay, so that's our price per unit. We have the number of units. Okay, well, maybe we'll finish with this part first. Okay, we have price per unit, which is this. What I'm gonna do is just to minimize this to the bare minimum. Okay, we can't get lower than that, 0.01, and that represents 1 unit of gold, which cost 1 ounce of gold, which cost 23.40. Okay, and now when I multiply that by the amount of units that I have, because I only have 1, I don't have to multiply that, and that stays the same. Okay, let's write it down. Okay, actually, let's increase. I think we're going to increase, guys, to be able to see this comparison, because with 1, I think it might be complicated to understand. Actually, let's begin with 1, and then we're going to have 2 scenarios. I think we're going to have 2 scenarios, and that's completely fine. So we're going to have price per unit, leverage that doesn't change, and margin impact. Okay, value. Okay. So we have 2 scenarios, and then we can compare the numbers. This way it will be easier. Okay, so that's for 1, and that's for 50. Great. All right, the price per unit is not going to change. This is why we are simply going to paste it both cases. Okay, in here and in here. This will be 1 unit, and at the bottom we're having 50 units. The value here will be the same. Okay, we're just doing this mainly to make comparison. Okay, leverage is also the same. Okay, and we are going to see that the value will be different. Okay, and for that it will be 17. All right. Now let's understand what I wrote here. Okay. Okay. So exactly as it's written here, price per unit, which is that, times units, which is this number. Okay, and that is interpreted from the lot size. So that is 1% of my lot. So for gold, it's going to be 1, right? But what about? Okay, so let's also have another asset here to compare. Let's say crude oil. If it would have been oil as an example, 1%. Okay, will be a 10, right? So in here, 1% is 1, and in here, okay, you can all see, right? 1. That means that, okay, I'll explain about it later on, but 0.01 means 1, so my value is actually the same as my price. Yeah, we can all see that. 23.40, well, now 23.39, but you see that the value is the same because we only have 1. What about oil? Let's see. When we have 1, well, we don't have 1. When we have 1%, then the value is times 10. Just a second, guys. Now, why is that important to know? Because when I'm calculating my budget and I'm calculating how much margin I have, and I have to consider that, okay, if I take 0.01 with oil, I have to multiply the value by 10. Okay, doesn't really matter that gold is still more expensive than oil, even 10 times more, because it's 80 and gold is 23.40. But I'm teaching you, I'm giving you guys this ability so you'll be able to make this comparison by yourself and perhaps optimize your position to higher or lower budget, depending on what you're planning to achieve. All right, and if it would have been 50, as we saw, so we have those numbers. We have the price per unit, which is the same, times 50, which equals that. Let's do it together. So we have 2340 times 50, and that's the number that we have here. That's the value, right? And we have the margin impact, which we said that we have to divide the value, yeah, by the leverage, which means that if I'm going to take that number and divide it by 20, I have that number. Okay, this is really, guys, as simple as it can get. As I said before, this is just universal, so you can change the numbers and it will still work the same way for MT4 and MT5 users. Because you don't have that, I would recommend you to jot down the equation and you'll be able to determine by yourself the necessary margin requirement, or you can just come here to the WebTrader and do the preparations in here, and then the execution can be performed on MT4 and MT5. Okay, so that's how the leverage works. I would just like to mention one more thing regarding the leverage. What I'm using, okay, so this concept is called CFDs, contract for difference. Okay, what I'm showing you now. We also have options and futures and all kind of interesting things, but this is CFDs. CFDs. Okay, contract for difference. There is leverage trading. Okay, by default. By default, it's right here in the system. And that means that I have to comply with a certain margin impact to launch the position. However, because we're giving leverage, we are also expecting you to sustain a certain level of margin on your account. So your margin level shouldn't drop below a certain number depending on your regulation. Okay, so what I'm using, let's suppose I'm going to take 100, maybe less, say 90, 85. Okay, so that is going to basically actualize all, well, not all of my margin, but I will be on almost 100%. Okay, if I could execute for 10,000 flat, I would have been on 100%. And if I go below, when I lose, my margin decreases. If I go below a certain point, that's called margin call, and then I'll have to either defibrillate more funds, release other positions, or just in any other way free up margin to be able to sustain the position. Okay, keep that in mind. Moving forward, you always want the account to be able to maneuver. You don't want to use your whole capital, and then if you get stuck, the platform will close your positions if you can fulfill the margin requirement, the margin level requirement. Alrighty, it seems fine. Do we have any questions, by the way? I'm sorry, I almost forgot to ask. Do we have any questions, guys? Is there something not understood? And I also noticed that nobody has placed any questions until now. You guys, you know that this is one of the unique concepts that allows you to ask your questions and see your answers live. So I wish I would have had that in the beginning. Yeah, let's carry on to the second segment. Let's take that, and perhaps let's take that. I think that does the job. Actually, thinking if we are going to have enough space on the presentation, because you guys know how it is with the way that it's here, because I do want it to be presented well. Okay, but I think this is understood, right? This looks fine. Okay. Can I get signals with AvaTrade? Okay, all right. So let's see the signal section. Signal section will be found to the left of the website. This is again here part of the web trader. Okay, we're gonna click on the signals. There is another way for you to get the signals. I'm just gonna show you from the outside, just from here from the list, and then we're gonna hop back to the signal section. The reason that I'm showing you is on the signal section, it's gonna show me what has a signal already, because it's a section dedicated to signal. But what if I want to know if the assets that I am trading has a signal or not? If I don't want to go through now the whole list and look for my assets, what if I want to first pick the asset and see if it has a signal or not? So what I can do is I can put here at the search field gold. Okay, we have a question here from Billy. I am relatively new to Forex trading, so I will appreciate if you can teach me how to open and close position. Yeah, well, that is completely fine. Actually, thank you for the question, Willie. Okay, we are going to take your question. If only it will allow me to one time just, oh, there we go. I think now it worked. And yes, okay. We have it. All right, okay. All right, let's carry on. Okay, so as I was explaining, we have the signals here from the signal section, but I can also check if my asset has a signal or not, right? So what I did is I put in the search field my asset, and it shows me that it does have a signal. That means that I can click it, and it's gonna open me the signal specifications. Well, we're gonna witness now, I think that the signal has already reached a key level. So if I'm gonna click here, buy or sell, let's see if it will let me. It's not gonna let me use the signal. Okay, it's as we speak, it reached the analysis that was on it. Okay, so it expires, and I'll have to wait for a new one. Okay, I'm going to show you now an example for a valid signal. We're going to click here on the signal section. And now we are going to scroll down, scroll down, scroll down. Let's go with Dow Jones, US 30. We are going to expand the chart all the way up. And we have some, so this is how the signal is made, right? We have here the signal. You just saw how easy it was for me to just get here. We clicked one thing, and then I picked the asset from the list, and I'm already here using the signal. The way that is made is we have resistance and support level, and here in the middle, we have the middle line, okay? And we have here a buy scenario and a sell scenario. Here we have the key levels. We have support and resistance, as I have explained. If I want, I can match the validity to the chart. So here, if it's daily, I can click here and change it to daily. and then I can squeeze it down by clicking on the column, price column, and then I can move it up and down. And then I can just confirm the levels to see if I like it or not. And then I have a buy or a sell scenario. Let's assume that I've come to the conclusion that a buy scenario looks a bit better. So I'm going to click here on the buy. And then automatically, you saw that with gold, it didn't let me do that, right? It didn't let me, it wasn't placed automatically, the take profit and the stop loss, right? Let me show it to you again. Because there are some things that the analysis upon our signal already reached. So if I'm going to take the FTSE as an example, it passed that point. So by clicking here on the buy or sell, I'm not going to get the take profit and the stop loss. And now let me explain what the take profit and the stop loss are anyway. Just a second, let's bring up Dow Jones again. Okay. All right, so we have three types of pending orders. We have execute when price hits, take profit, and stop loss. They are all pending orders. Pending orders. Okay, closes the position. Position with a profit. Close the position with a loss. Open the position when reaching the price. Okay, so we have execute when price hits. We have take profit, and we have stop loss. Execute when price hits, open the position when reaching to the price, take profit, close the position with a profit, and stop loss, close the position with a loss. This is, as I said before, as simple as it gets. It's placed automatically. I didn't even need to do any analysis here. Okay, let me show it to you again. So we are 3 clicks away. I'm gonna click the signal section. Okay, we have a question from Timothy. Very new to this. I wish that somebody will teach me how to trade. Well, first of all, Timothy, thank you for your question. It's not really a question, but I completely understand you're new and you want somebody to teach you how to trade. Okay, let me perhaps take your question just a second, but first let's just finish that bit so we won't lose focus. Okay, so I was with the Dow Jones. I wanted to show you how simple it is to use the signal. So just watch, okay? So 1 click, 2 clicks, and we are here. Okay, very, very simple. Of course, there are preparations that I would probably want to do. I want to change the validity. I want to see its support and resistance are still valid for me to use. And the signal is going to show me a possible profit and possible loss in a ratio that I like. Okay, of course, I can adjust it. If I'm not happy with it, I can adjust it. You see that with a buy scenario, we can potentially make 33.5. And we can potentially lose 76.5. Okay, and if I want, I can just adjust it, obviously. Okay, and then it would make much more sense. Okay, that is called R&R, risk reward ratio. This is my risk, this is my potentially reward. Okay, and we have up here, oh, needs to be a little higher. Okay, and then I can adjust it, and I can also adjust the lot size. Okay, and then again, it will have an impact on my profit and loss. But overall, if I don't want to adjust anything, that's going to take me less than 10 seconds to launch the signal. Okay, And of course, it doesn't cost anything as an addition. As you saw, I'm accessing this section just like that without any special procedures. Okay. All right. Let's take the, oh, we don't really need to take that because this explanation is more about the pending orders. Okay, so perhaps I am just gonna write here, can I get signals? Yes, signals can be used via the web trader or the AvaGo. Okay, perhaps. What else I can say? They can be found on the left side under signal section. Okay. All right. They can be used. Okay. How much time should I spend trading for a week? For a weekly strategy, how much time should I, oh, okay, how much time should I spend trading on trading, perhaps? Makes just a bit more sense for a weekly strategy. Okay, yeah, well, the obvious answer for this would be, well, I want to see what the audience thinks. What do you think, guys? How much time should somebody spend for a weekly strategy? How much? Few hours, few days, few hours a day? What do you think? All right. So Mario, you're saying an hour a day. Who agrees with Mario? An hour a day will do, so we have 1 hour a day. Who else thinks differently? An hour a week. Okay, so Aline, an hour a week. We have 1 hour a day. We have 1 hour a week. Okay. But what exactly, let's suppose that I'm dedicating 1 hour to trade. Okay, so how will I divide that 1 hour? Okay, so we have Billy here, few hours a day. Okay, so few hours a day. Okay, so this question, weekly strategy, what exactly does that mean, weekly strategy? It means that my positions will be ranging with approximately average of 1 week length to trade a position, right? We have intraday, we have scalping, we have swing. So scalping, typically I'm opening and closing at the same day, sometimes even at the same minute, even a few minutes. Okay, so that's considered as phase-based trading. We have intraday, which could be a day, even a few days, could be up to a week, even some say. And we have weekly, so weekly can be ranging between a day, between a week up to, I believe, 10 days, give or take. And more than that, we could probably call it swing. I think a month or more, it's already swing. So it's not weekly if I'm holding it for a month, okay? Now, I don't have to be busy few hours a day to hold a position for a week, right? And still, what do we have to spend time when we are trading? Okay, because hypothetically, I would think, listen, this is very simple for me. What I'm going to do is I'm just going to go here, click buy. If it goes up, I make profit, right? Is this, and then I save a lot of time. Should I do it? Can I just do it? can I basically first of all, I need to know what I need to spend my time on, and then I would probably know how much time I need. Otherwise, how will I know how much time I need? Just a second, guys, I'm sorry. Every now and then I have to consume some liquids, otherwise I'm losing my voice. All right, so we have here a few things to understand. First of all, I need to do analysis, right? Is that correct? Should I, what do you think, guys? Should I begin with analysis or something else? What do you think? Who thinks that analysis should come first, and who thinks that analysis should come after something else? Analysis come first. Okay, Tom, I'm with you. Oh, well, I'm not necessarily with you, but I understand what you're saying. Okay, Kamala, you're also saying analysis. So we have 2 votes for analysis to just begin with analysis. Who thinks differently? Billy as well, okay. Without analysis, we don't know what. Okay, yeah, Elaine, I understand. Without analysis, we don't know what to do. That makes sense. Okay, so analysis will be the first. Okay, we have done analysis. Very good. What kind of analysis we have? Technical. Okay, and right. What's the other analysis that we have, guys? We have technical analysis, and what's the second one? Who knows? Somebody must know that. Fundamental. Thank you, Elaine. Very good. Okay, so we've done the analysis. We did technical analysis. We did fundamental analysis. Very good. And now we're ready, right? Or there's still something to do. What should we do after we did the analysis, guys? Okay, I have analyzed. Now I'm looking at a very interesting candle. Let's suppose that this is the third hammer that we have. Okay, so clearly that potentially led Dow Jones to bullish, right? We're also having a very nice, just a second. Okay. We have a very nice reversal, which we can roughly measure from here. Okay, and let's suppose that we are on track. Just a moment. Okay. Right. So let's suppose I did the analysis. That makes pure sense. I don't have this. I don't have that. I also don't have this. Yeah. Yeah, so I did the analysis. I'm convinced. Dow Jones is heading up. Can I just click here buy and it will be fine? What do you think? Should I click here buy, or are there more things to do beside analysis? Let's suppose we also read the fundamentals and we understood that something positive happened with the economy, and the previous report seems transparently positive, and we can expect Dow Jones to increase. So we have technical and we have fundamental analysis, a very, very nice analysis. Do we need to do something else? To change the lot size. Okay, John, to change the lot size. But John, if you can explain to me, please. So to change the lot size, let's change the lot size. Let's put here 1 lot. Is that okay? Can I put one lot, John, or what else do I need to do in order for to succeed? Because it seems like analysis is just sum of things. So what else do I need to do? This is too much. Okay, so this is too much. What do I need to do? Adjust the position. Thank you, Francis. What do you mean by adjust the position, Francis? Please. Take profit and stop loss. Very good. Very good. Okay, let's write it down. Okay. Okay. So we have, John, you said lot size, right? Okay, so we have lot size, we have take profit, stop loss. We're getting somewhere. Very good. Kamala, wait for possible retracement before entry, but this is regarding analysis. This is regarding analysis, Kamala. I'm asking if there are more things to do beside the analysis, because it appears that if I'm just going to go like this, I have absolutely no idea what's going to happen. I don't know how much I can make. I don't know how much I can lose. Even if it goes up, I don't know what price should I close it with. I don't know what price I should open it with. Okay, so the analysis, it seems like we're missing some things, right? So we need to compose this position with sense. We need to have, as it's written here, some logic, okay? Now, we have analysis, we have fundamental, we have technical analysis, and we have the position, let's say, to compose the position to certain guidelines, trading plan, okay? In other words, if right now I'm going to take a buy, I have no idea what's going to happen, right? There we go. Who wrote down? Billy, you have given us what I was looking for until now. Very, very good. Very good. Okay, I'm just going to write it down, and then we'll get to that. Very good. Okay. Again, I wrote it down with the orders, with the order that seems right, but I don't necessarily think that this is the absolute efficient order. Okay. Perhaps I would have first composed a position, then I would see if it's really worth for me to analyze Dow Jones, or it's beyond my budget, or I just don't like the chart. Okay. There could be many things, but it could be this way. It's not a problem. But it needs to happen. To my personal opinion, analysis, composition, and risk money management all needs to be part of the preparations. Okay, and also budget. Okay, margin. Okay. Now, let's suppose we did the analysis. Okay, no problem. Let's suppose that I want to compose the position with a bit of sense. Okay, I think this one. Okay, sure. Let's carry on with that, because the lot size is it might be a bit dodgy for people to understand, but never mind. We're gonna go through that if necessary. Okay. Now, when I want to take this position and I have adjusted the numbers to be $100 up, $100 down, I have 0.1 because the lot size is 10. That means that 0.1, which is 10% out of 10, is 1. Okay, and in here, let's set it to 39, 300 flat, and then we can set this to be flat and that to be flat. Let's actually increase. Okay. And now we can see that we can make 200, lose 200. That's fine. It's 2%. Yeah, it's 2% out of my 10,000, and that's fine. Okay, just to show you guys. Okay, and everything seems okay. So risk money management wise, it looks fine. Comparison with the margin, it seems like I can take this position. Is not even half of my balance. Okay, and it seems like I can do it. Not saying if it's good or not. And now everything makes sense. I have a position showing me the numbers that I want. I have analysis, which I did. I also know what is going to be my exposure. I know I can lose 2% or more than that. And yeah, so this is in a very, very basic form what I can do to utilize my time. And to the question, how much time should I spend on trading for a weekly strategy? You should consider that if you want to do it properly, you might want to go through those steps and not just randomly execute the position. Again, it's not mandatory, but those things are things that we recommend to have just a better overview on what's happening. Okay. Yeah, let's carry on. Let's carry on. Let's carry on. Okay, let's see if we have any questions. Okay. Okay. All right. We're gonna have to take the question from before. Okay, so Tim, you asked for somebody to, let's see if I can paste it here. Okay. All right. Let's see, what color was that? Okay, great. So it seems like we have covered the first and the second question, and now the third. Let's add this into our presentation. Okay, hopefully it will present it properly because I don't know how it's going to look when we, oh, there we go. No, it should I think stay this way. Let's see if we can put everything in the same line or it will look confusing. No, it seems fine. I think it's understandable. Yeah, how to use candlesticks for analysis? Well, that's a very good question. So as I was explaining about this scenario that we have here, how to use candlesticks for analysis. So one of the things that we can do is look at the shape of how the candles are looking like. And this looks a bit different. I think that we are on this, oh, we are on the signal section. This is why it looks like that. Okay, so I'm going to teach you guys a nice trick how to go back to the default screen. All we got to do is to click here on AvaTrade. And we are back on the original screen with a nice toolbar that allows us to do different things. Let's put an asset down. Okay, now, how can I use candlesticks to improve my analysis? Just a second. Okay. Okay, guys, just give me one moment. Okay, so one of the ways is to analyze pattern. One of the ways is to analyze candles. But I'm going to be frank with you, each candle can also be a pattern. And what do I mean by that? Because a weekly candle is made out of daily candles. Daily candles are made out of hourly candles, and hourly candles are made out of minutes. We can understand that if we surgically look into a candle, let's say like that, we can discover then, I've explained about it I think yesterday as well, that this reversed hammer is actually, it's not only that, it's not only the red area, it's what we have above as well. So that means that it was rejected, hinting that it can possibly go down. Yeah? Do we understand that? Okay. And why is that so important for us? Because, okay, let's keep it this way. Because if I see something like that with the tail at the top, and I can understand, okay, this candle has started here. Initially, it went very high, but then it closed at the lower price. Okay, now how can I possibly know that? Let's look at that number. Just a second. Okay, and we can see that, let's go to days, and we can see that on that particular date, as we saw, first it went up, right? This is after the weekend, so we might want to put it this way. Yeah. Yeah, as we can see, let's go back, make sure that this is the right one. Yeah, that's our candle. Definitely our candle. And you can see that it did exactly what we said. Okay, there are way too many things on the chart. I did want to show you that, but this will only make things complex, and I'd rather keep it as simple as we can. So we're just going to focus on this guy. Otherwise, we have too many things. Okay. All right. And as we said, this is basically our candle. Okay, as you see, it went up, it got rejected, it went down, and then similarly, it got rejected in here as well. And finally, we have this bearish, almost 1 week straight, just bearish for a week to drop. And this is a very nice way to use the candles, okay? You can use, there are many other shapes, dragonfly, morning star, head and shoulders, all kind of things. We're not gonna have enough time to talk about them all, but you can explore them by yourself. And yeah, I think we pretty much concluded this question, because I do want to answer other questions that we received by whoever asked me in the beginning about the, let's see, to open and close the position. Right, so we have two people here, two new people here, and that's completely fine. Which did somebody will teach me how to trade. We actually have a solution for that. To get personal assistance with trading and education, you can have access to a senior account manager that can assist you along your journey with, okay, that can assist you with trading, teach you, assist you, and teach you to trade. Okay. Right. Okay. That seems pretty good. Okay, you can check your eligibility through our customer service unless the senior account manager already contacted you. I'm relatively new to Forex. Close and open a position. Okay, so this is just in here. How to use candlesticks. Candlesticks has many shapes for different structures and can be analyzed through different times to analyze the inner trend. As we saw just now, okay, when we are looking at the weekly candle, it has days in it and days as hours. Okay, this exercise that we saw now with a weekly candle can be on other candles as well. But we're not going to do that. We don't have time, unfortunately. Let's just go through the question here. I'm relatively new. I would appreciate if you can open and close a position. Of course. Let's see here how to open and close a position. So this is wheat. We're looking at the buy, right? We're looking at the buy. Just a second. Yeah, we are, yes, we are looking at, no, we're not looking at a buy. Absolutely not. And of course, it could be a buy, but presently it seems like wheat is plunging for the fourth week. This is already a month. It's been going since it dropped from this resistance. Okay, 717 to roughly 525. You can see by yourself that wheat potentially can get even further down, okay, below that segment. And how can I open a position? Basically, what I can do is I can click here on sell. Let's suppose I want to sell. I'm going to change the lot size to what I want. Let's suppose that I also want wheat to drop down another $20 for me. So for 573 to 553, then my take profit will be $20 down. And then my stop loss can be simulated with the same length. So 593, maybe even, no, let's keep it as it is. And then all I have to do, click here, sell, then I open the position with a sell. That's how it is. And to close the position, all I have to do is just, I'm going to go to my positions, and then I have here X to close the position. Then I click here on the X, I close the position. Really, really simple. I suggest you'll try it. You can try it on a demo. This is super simple. And yeah, I hope it helped. Alrighto, so let's share with you the links. I'm gonna paste you that on our chat. If I could just find, oh, there we go. Okay, I've sent you the first link. This is for the educational center, the education center. That is to make a deposit, log in and make a deposit. That's for the back in the help center. That is for a real account. Okay, and that's for the academy. Okay, I'll be honest with you, even if you click here at the bottom, let's go back. Here at the bottom left area, we have the chat, and above that, we have the education with tutorials and with academy. So I can click here to get to the academy. Okay, and as you can see, there are all kind of things here, all kind of videos and content and all kind of things. Okay, and in here we have the tutorials that I can scroll down, and it's going to show me here all kind of things. We have explained about leverage and margin. Okay, I can click here, then I'm going to see it. Very, very nice. All right, and before we say goodbye, I would like to grant you guys with a benefit. We're going to give you this Q&A benefit. So your senior account manager can give you a one-on-one premium market review. Okay, I'm just pasting it in the chat. You can take this code, give it to your senior account manager, and then you can enjoy a one-on-one premium review. To my personal opinion, this is maybe one of the most useful things that you can possibly have. Just market review with somebody who's already professional in trading, very, very educational from the field, how it's happening and why it's happening. It's very nice to see. All right, guys, we are finished for today. I think our time is up. Thank you all for the audience that asked me such lovely questions and assisted me with the answers and everything. So thank you, guys. It's been a pleasure to be here today. I hope that people learned at least one or two things from the webinar as well. And that's it. Best of luck with your trading, and have a good day.